Have you ever wondered how to evaluate a company's stock? Ever felt lost amid the financial jargon? Today, we lift the fog on one crucial concept, the price-to-earnings ratio, or PE ratio for short. Imagine you're at an auction and the item up for bid is a company's stock. How much would you pay? The answer isn't as straightforward as you might think. It's not just about the company's current performance or future prospects. It's about understanding the value of the company relative to its earnings. And that's where the PE ratio comes in. The PE ratio is a financial metric that investors use to determine the relative value of a company's shares. It's calculated by dividing the market value per share by the earnings per share. But what does that mean exactly? Think of the market value per share as the price tag on the company's stock. It's what you'd have to pay to own a piece of the company. The earnings per share, on the other hand, is a measure of the company's profitability. It's calculated by dividing the company's total profits by the number of outstanding shares. So, when you divide the market value by the earnings, you're essentially finding out how much you're paying for each dollar of the company's earnings. A high PE ratio could mean that the stock is overpriced, or that investors are expecting high growth. A low PE ratio could indicate that the stock is undervalued or that the company is not expected to grow significantly. But remember, the PE ratio is just one tool in the investor's toolbox. It's not a magic crystal ball that can predict a company's future. It's a snapshot of how the market values the company at a specific point in time based on its earnings. To summarize, the PE ratio is a measure of a company's stock price relative to its earnings. It can give you a sense of whether a stock is overpriced or underpriced, and it can provide some insight into how the market views the company's future prospects. However, it's crucial to remember that the PE ratio is not a standalone indicator. It should be used in conjunction with other financial metrics and qualitative factors to get a holistic view of a company's value. So the next time you're evaluating a company's stock, don't just look at the price tag. Consider the PE ratio and ask yourself, what are you really paying for?